but I didn't record it, so I just want to go through it again. Your trade and other payables. Always remember, trade and other payables and trade and other receivables go together. So I'm going to just quickly show you, if I've got receivables and I've got payables, I will start debtors control, creditors control, right? I will have accrued income, accrued expense. I will have prepaid expense, income received in advance. Can you see? I need you to see this. Both receivables and payables has got an expense. And both receivables and payables has got some or other thing with an income. And both receivables and payables has got an accrued, and both has got a future. So this you must remember like crazy. Okay. So now when I look here at the trade creditors, I'm just quickly going to go through it. The trade creditors is the creditors control, and both of those were adjustment number 1 when we returned. This was a discount on the repairs, and this was goods returned. Right. The accrued expense was my water and electricity. The income received in advance was my rent. Okay, but please don't go and write rent there. Okay. I just also want to make sure you understand income received in advance. A shorter name for it is deferred income. Okay. So meaning a prepaid expense, you can talk about a deferred expense. Deferred. 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 So then I just added, and this is now my payables. So when I go to the face, I immediately go and transfer it to the face. So we already started. Remember, when you study the format of the balance sheet, you got assets, you got liabilities, you got current and non-current, you got current and non-current. You can also see that you have a fixed deposit and you have a loan, and those two are most opposites of each other. Okay, so now let's have a look. My fixed assets, what I want is I want to take the cost price plus or minus whatever happened during the year. In other words, if I had an addition or a disposal, but remember the cost price. Then I want to subtract the accumulated depreciation and the depreciation. Okay, so cost of land and buildings, cost of equipment, vehicles, accumulated gives me. My fixed deposit was 52,500. They say 20,000 will mature. So I subtract it and I put it into cash. Block and top. Remember current assets, always inventory, receivables, cash. Please. So if I go look, my inventory is most always the stock tank. So I've got 59,300 plus 285, and that's going to give me 59,585. You guys will see there was an adding mistake, so just fix that. Ne? Let's go on. So next, trade debtors. If I work through it, personally, I like to go through my stuff like this. I start at the top and I work it down. So I see, they give me land and buildings, it's already in, vehicles is in, stock is in, debtors control is a receivable, 17,975, so that is in. Creditors I've done. Bank, I see it's a positive and I know that's a cash, 10,350. Then I see provision for bad debts, and I'm going to take the new one, 683, and I'm going to subtract it because it makes the value of my debtors less. Right. I know my debtors is 79, but I am planning to receive 683 not. That was very good English. I am planning not to receive it. Okay. Then I see accumulated is in, fixed deposit is in. Next thing I'm going to go through is my adjustments. First adjustment, I've already done it. Second adjustment, third adjustment, why is it numbered so weird? It's already done. Then I see next adjustment has got to do with the bank. And the credit will make my bank more, and the debit will make my bank less. Can you see I did something very dangerous? I left doing all the adjustments in here. With bank you must be careful. I actually would advise you to draw a T for bank at the top, because bank can jump. And the moment bank jumps to the credit side, it becomes a bank overdraft. Then it doesn't go here. Right. So say for instance, I paid someone 20,000 Rand. Ne? Can you see? Then my bank becomes negative. Then it goes to bank overdraft here at the bottom. There. Okay. Let's go back. So I've done the debtors. Remember now there was a 900 Rand bad debts. Ne? And that is also going to make my debtors less. Then the loan statement, I see I take the closing balance, 820, and I subtract the short-term loan. And now they say here, the business pays back a fixed amount every year. So the fixed amount would be the opening less the closing, which is 160. So that 160 goes to short-term loan as well. So this would be what? 660. Is that right?
Yes, ma'am.
Okay. Next one, water and electricity. That's accrued. We already did it. Insurance was a prepaid. So that makes my debtors more. So I need to add it here to the debtors. And how much was prepaid? Is it 1,320? No, it wasn't. What was it? 1080. Prepaid expense. Can you see? You cannot do it if you do not know what goes where. Next one. Set of offices. That was an income in advance. Already taken care of, and so I can close off my balance sheet. So trade and other debtors, I say 17 less plus gives me how much? $16. Okay. What do you get cash?
That's what I thought.
What did you get cash?
What did you get?
30. And then if I block on top, I get 107,315. Now I bottomize by taking the non-current and the current, gives me the total of what? And that I will immediately transfer here to the bottom, 582,908. Did they give me capital? Let's quickly look. I don't know where my
No capital.
stuff is. Where's my... So the capital, they didn't give me capital or nothing. Ne? So can you see I don't know any of that. But Can you see I can calculate this? And how can I calculate this? By saying, if I total this, it gives me 999,9,721. Is it 17? Okay. So if I say 582908 less 1799 less 6680, it's going to give you a negative. So this thing doesn't work out. Okay. So don't waste your time. I should have actually just docked it.